My name is Adrian Meager. I'm the General Manager of Warwick Asset Management, and today I'd like to spend a little bit of time talking to you about asset allocation, what it is and how we do it at Warwick Wealth. Asset allocation is an investment strategy that aims to balance your risk and your reward by apportioning the assets of a portfolio based on your goals as an investor, your risk tolerance, and the investment horizon that you might have. There are three main asset classes. These are equities, which would include listed property. You have the broader fixed income, which includes your bonds, and then you have traditional cash and cash type investments. Each of these asset classes will have a different level of risk, and therefore the return of those asset classes will differ, and they all behave differently over time and different time periods. There are different methods that asset managers use to manage the asset allocation of what is called a multi-asset class portfolio. A multi-asset class portfolio is just a portfolio that consists of equities, bonds and cash. So some of the strategies that we like to use are top-down and bottom-up. At Warwick, we prefer a combination of top-down and bottom-up. I will spend a little bit of time in the next question and answer on what is top-down and bottom-up and explain a little bit for those listening to the video cast. Top-down investing is an investment approach that involves looking at the overall economic environment and then breaking down that into its various components. So at Warwick Asset Management, we have what we call our capital market assumptions, and these are based on a top-down approach. So you would examine critical components that drive overall macroeconomic view. These components are then built into our expectations, and these expectations are on inflation, interest rates. We forecast economic growth, and then we look at the South African Rand, and we give a view on where we anticipate the South African Rand to be at the end of the year. So once we've completed our capital market assumptions, and these are not done once off, these are done every quarter, and you review based on information at hand. So you take those capital market assumptions, you put them into an expected returns calculator, and then from that calculator, you're able to get an idea of what you expect the returns to be from equities, bonds, listed property, preference shares, commodities, and cash. Once we've got those calculations, we're able then to best identify which asset classes we want to utilize in our portfolios. Once we've finished that step, we then move into what is our rigorous stock selection process. Bottom-up investing focuses on the attractiveness of the assets through analysis of individual stocks and then building a portfolio based on the attractiveness of those assets. So you can see it's quite different to that of top-down. The asset allocation is then the result of the individual asset manager and the shares, bonds that he or she finds particularly attractive. So the bottom-up process is driven by the attractiveness, as I've said, of those individual stocks. And you might find that Warwick Asset Management, we can actually purchase shares in a stock market that is deemed overall expensive because we find value in particular counters. And we look to take advantage of that opportunity for our portfolios. We also find that several undervalued stocks could be in a particular sector, even though that sector could be deemed expensive. And that's why we find at Warwick, by utilizing the bottom-up approach, where you do individual stock selection, and the top-down approach, looking at the macroeconomic view, we'll end up, for our clients, having a better asset allocation. Perhaps no single investment principle has more impact on a portfolio's performance than the asset allocation. And while the allocation does not ensure capital growth or provide a guarantee against loss, academic research has shown that asset allocation is responsible for more than 90% of a portfolio's positive performance over time. As asset allocation has such an impact on performance, we continuously review our strategic asset allocation and amend our model portfolios in line with our house view. we remain true to our investment philosophy. Our investment philosophy is long only, active with conviction. And at Warwick, we will continue to manage our clients' investments in line with this philosophy.